Hey, welcome back. Here's another walk-in special video, and I just want to talk about the raft of multi-billion dollars worth of crypto liquidations, predominantly on the long positions. What do I mean by long positions? Where people are placing their trading bets on the upside increase of the crypto asset, the price of the crypto asset going up, but inadvertently, given the sentiment of the market, it is going the opposite direction. That is what we mean by crypto long liquidations. And then obviously there's the other side of the coin, when traders place their short trading positions on crypto assets and it goes in the opposite direction, where they were expecting the price of the digital assets to go down when it's going up. Well, that is what we call short squeeze. Now, why am I raising this as a topic? Is not to be seen as alarmist, just to really put into perspective that we shouldn't get into the habit of speculating our digital asset investments. This is something that has to be driven from our own thesis. Whether you're a believer in Bitcoin, Ethereum, Solana, or indeed any other digital assets that you're passionate about, you should always treat those and see those into the long term. And it's driven by personal conviction at the end of the day. Because I've never come across traders making a lot of money or success. Usually there's 99% of traders fail in their attempts to make money, whether it's crypto or indeed stocks and equities. So day trading are very dangerous, right? We should see it certainly into the mid to long term. That's how I've always been explaining in my videos. And given that these liquidations mostly happen, I'm talking about crypto liquidations specifically, they actually expose the fragility of centralized crypto exchanges, because the majority of the digital asset holders are on those centralized exchanges. Now, this is very dangerous as well, because if we put all of our digital asset wealth on the likes of Coinbase, Binance, or Crypto.com, they are still a counterparty risk. They could easily face a lot of risk potentially further down the line, whether it's receiving a regulatory notice from the financial regulators to shut those operations down in a particular jurisdictions. Well, you could potentially lose your crypto holdings, right? Or if they received a hack or a scam, which we have seen many stories, unfortunately, on that nature, where several crypto exchanges, particularly those that are non-registered, they've been susceptible to hacks and scams from outside attackers. Again, that's all the more reason why we should reconsider placing, I'm not saying all of your digital asset holdings off the centralized exchanges, but certainly the majority, you should consider holding those under self-custody, under a cold wallet storage like Trezor or your Ledger Nano X device. Now, on that effect, I have created a podcast which is called Crypto Vault. You will see the link in this video. I'd encourage you to watch through those, because it gives you some interesting stories. Unfortunately, most of them are negative, but they do serve the purpose, right? Just to raise awareness how dangerous it is to be hacked, or to be led to believe humongous gains if you lose your cryptos into a forex rogue trading platform or other social engineering tactics. So if you tap into that podcast, it will give you the ins and outs. What are the sort of red alerts that you should be mindful of, because no keys means no coins. So tap into that useful resource. And then there's another podcast that I've started out recently, which is around, again, raising awareness on what are the different regulations, whether it's crypto or even tax regulations, when you do decide to dispose or sell some of your digital asset holdings in the jurisdictions that you live. So again, I'm trying to stick to the education, insight. What are the next emerging RWA coin projects that I'm seeing? And that is covered, incidentally, on my weekly Friday desk review. So again, I would encourage you to tap into those videos, particularly on interesting RWA coin projects that have already reached traction into the mainstream in terms of on-chain activity, the amount of TVL that's been locked into those projects, the amount of news and announcements for coin projects. So I encourage you to watch on those Friday desk reviews where I actually give the lowdown. So really, just to sum up, just remain alert, vigilant, be skeptical whenever there's attempts of reach outs from these outside attackers, and certainly the day traders and those channels where they advocate on, the Fibonacci, this moving averages, and all the rest of it, because don't really serve the purpose, right? It just adds to the confusion and to the hysteria, because what is past performance is never an indicator on the future performances, right? No one has foreseen that Trump and the SEC will actually approve the Bitcoin spot ETFs back in January 2024, right? And neither has anyone foreseen, from a technical analysis perspective, the tremendous amount of new crypto ETF related products that are in the desk of Paul Atkins, the SEC chair, for review. So again, let's not get drawn into the technical analysis. Let's not get drawn into the hysteria, the FOMO announcements that you may be seeing out there, and just stick to your basics and fundamentals on beefing up your knowledge on crypto, cold wallet, self-custody, and just cut yourself off completely from that. So that's all I have for you today. If you enjoyed today's episode, please don't forget the like button, to share the video to colleagues, friends and family. And if you haven't done so already, please subscribe to my channel, as I regularly publish interesting videos such as these, including these walk-in special videos, anything to do with Bitcoin, real world assets and the future of finance. So till next time.